Day play is one of the first trades that we teach our prop traders here in New York City. It has an excellent risk reward. It's a powerful trade for after significant news. So this is a great trade for earnings season, and this is a great trade for after there's been significant news in a particular stock. It's simple. It's great. It's a great learning trade for developing and new traders. So even if you experiment with this trade and at the end of it you decide it's not for you, you placing these trades is going to give you an opportunity to learn so much about trading and markets while you're in the middle of it. There's no failing experience with a trade like this. There's just a learning experience. It's repeatable. So you're going to see this trade come up very often in markets. It's scalable. You can trade it big. You can trade it based on multiple time frames. So this is something that you can micro scalp, and this is something that you can turn into a longer term trade based off of these principles as used by successful prop traders globally. One of the traders that I work with internationally just talked about a great second day trade that he made that made his week. Trade the foreign market using principles that we taught here in the US, applying them to that foreign market, and really for him crushing it, and for really anybody else. This is a very, very large trader, even for anybody else, really using this powerful trade to profit very handsomely. Second day plays, you want to look for a significant news catalyst, something that's unusual and unexpected by the marketplace. You're going to have to find important technical levels. I'll show you one in the example with Twitter. Elevated RVOL, terrific to look for. RVOL is relative volume, so you want to look for something that's trading more volume on a given day than normal. You want VWAP in the direction of your trade. So if you're shorting it, you want the stock to be below VWAP. If you're getting long, you want the stock to be above VWAP generally. You want the tape confirming the trade. I had an interview today. They are looking for their setup inside of their playbook, and they're waiting to see it. And by see it, I mean their thesis and their setup is being confirmed by the tape. They're making their best trades when the tape is confirming and showing them that there's edge in the trade that they're about to make. And that by sticking to the importance and listening to the tape, they're putting on some of their best trades. And again, you're going to create your rules for exit based on your time frame. So if you're going to scalp this, you're going to create your rules for exit. If you're going to swing this, you're going to create different rules for your time frame. Our trade outlook in this Twitter trade. Twitter reported earnings and beat EPS by 1 penny, beating revenue by 13.65 million. Twitter reacted negatively to earnings because their monthly average users, their MAUs, were expected to increase by 1 million, but rather declined by 1 million to 335 million due to the increase in account removals and suspensions to combat abuse. So what happened was in this earnings report, the monthly average users were lighter than expected. This is an example of how we measure the core of how a business is doing. So the most important thing for Twitter would be how many people are coming to their platform. And in this case, less people are coming to their platform. They're going to go out to their advertisers and they're going to say, you should pay us X because there are these amount of people who are on our platform. If they're less, then they're not going to be able to make as much ad revenue when they go out to their clients. Institutional ownership, 62%. ATR, $2.48. RVOL, 2.5 on this particular day, so elevated RVOL. You want to shy away from a second day trade if it's below 1. Market cap, a lot, but for those of us who own this long term in our personal accounts, hopefully got some ways to go. And what's interesting about that is I actually own this in my personal account, and this is a trade we actually made on the short side. So there was a divergence of what we're doing in our personal account and what we're doing in the trading account. All right. What is the outlook for this particular trade? What's the big picture of this trade? Well, the market's been really strong, right? I don't need to tell you about that. Market is trending up and has been in it. In this case, we're looking at Qs as well, not just SPY. Qs that sold off on the open and close week, but still in a very strong uptrend. XLK opened at 71.80, sold off 1.5%. All the major indexes were weak throughout the day and closed near the bottom of their intradays. But again, so short-term weak, pulling in, but not a ton. Long-term, near highs. Hey, we're in a bull market. So what's interesting about this is that this was put together by one of the traders at our firm, and we were discussing it before this presentation, and he used XLK as an indicator for how we ought to attack Twitter. And I said to him, why don't we go back and do a second draft, because XLK is not as important as Facebook for an indicator for how Twitter might trade. And I want to explain that. So recently, Facebook had earnings, and as you can see, they revealed on this conference call that expectations for its growth rate were to drop by high single digits for the next couple of quarters. And so operating margins slipped. Raymond James, Piper Jaffray, Morgan Stanley, all lowering their Facebook price targets. So Facebook is disappointing the street with its growth going forward, and on the daily chart, dropped 20%. And so Facebook and Twitter are not the same company, but there's overlap in what they do. They have a platform and they sell advertising to reach out to their customers. So Facebook, just before this Twitter earnings, had dropped 20%. And so instead of looking at XLK, my suggestion was we should be looking at, and I was looking at this as well, we should be looking at Facebook as an indicator, along with how Twitter was trading, to help us make a more informed decision. All right, so daily chart, Facebook's up 20%. Important levels in Facebook after earnings, 175, very important level. That's where lots of volume was done right after earnings. That's where it came together. And then the lows, 173.20, 173.80. Those were low points on 2 different days for how Facebook traded. If Facebook got below 173.20, and in this case 173, and I was looking at Twitter and Facebook traded below 173, I would use that as an indicator that my short was more likely to work. Because now another stock in a similar area, in the same space, in the social media space, in the social media advertising space, was selling off. And again, we're making short-term trades. I'm not suggesting that Twitter is going to be trading lower for the long term. I'm suggesting for a short-term basis, the most logical move would be to the downside in this particular setup that we're going to show you. Okay, Facebook very well could go back up to 200, but if it got below 173, the most likely direction next would be down. On the 1 minute, you can see on this particular day that it did trade below 173. And that gives us a better indication than our XLK ETF, and a smarter thing to be looking at as well as Twitter for how we might trade. All right, so Facebook's below that significant level on this particular day. SPY's near tops. SPY on the 1 minute is selling off. So on the short side, that's going to give us some ammunition. Qs on the daily pulling in, Qs on the daily holding below VWAP. That's going to give us a little bit more ammunition if the short's going to work. XLK on the daily sold off a little bit. On the 1 minute, holding below VWAP. So technology sector is a little bit is weaker on this intraday. But as I was saying before, the one trader instantly went to XLK, and I said to him, I like that you're thinking about what to use also besides the price action in Twitter. But if you take a look at the percentage of XLK that Twitter is, it's very small. It's 0.31%. So while I like you thinking of something else to look at, it's not really going to be as correlated as you had originally thought. Some might actually instinctively think that social, SOCL, would be the ETF most likely to move with Twitter, but that doesn't do a lot of volume. But the general principle is strong. Let's go try and find an ETF that we can use as information to help us inform a better trade decision. All right, so Twitter on the daily chart, as you can see, in sympathy with Facebook came in a little bit and then pulled in from 44 down to 34 and then to 32 as we're looking at on the daily. On our 5-minute chart, you can see that 34 was the big level from the day after earnings, and that was a tremendously important support level. You can see it bounce off of that multiple times, holding 34, holding 34, holding 34, holding 34, even into the close. So this is our important technical level that we're looking at. So when we talked about the variables for a second day trade, we want an important technical level to trade off of. We want a significant news catalyst. We have that in Twitter's earnings, which are later than expected. We've got this important technical level to trade off of, which is 34. We've got elevated R-vol, which is almost near 3. Now let's go take a look at the trade. We've got this 34 level. 34 acted as support into the close of the previous day. The first day after earnings, we call it day 1. So on day 1 after Twitter earnings, it could not trade below 34. If it trades below there the next day, the most likely direction could be down, particularly when that 34 holds up. We'll talk some more about that. And it continues to hold the support throughout the post and the pre-market. So day 1, 34 is the level, and then the post-market and the pre-market 34 is this level. This is a very significant technical level, just bouncing off of it multiple times. Great level to be trading off of. All right, so let's talk about the trade management. So you can see a little bit of a lower highs created as Twitter can't bounce back to above 34.50. You have a trade option to start anticipating the breakdown through 34 and add 1 lot on the opening stuff candle. You want to add 2 lots. You want to put on more risk as we get that break through 34. All right, so this is now below our key level. Couldn't get below there all day yesterday. Sector's a little bit weak. Gets below there today. Boom. You want to put on risk. Boom, we're below the level you want to put on risk. Boom, we're below that level. Got to put on more risk. This is a good second day trade. Got a news catalyst, got your R-vol, got your level. You want to give this a run. You want to cover into moves that are not sustainable. So you can cover one lot into the weakness, the downside, and you can cover your second lot when Twitter breaks down to a new low and then starts looking for bounces to add back. So this trader in this case was looking for potential to bounce, looking for the volume to elevate and take some risk off the table. Now this trader is making a shorter term swing trade. You certainly could have swung this for, you can certainly make this into just a scalp, just take the scalp down. All right, you can make this into an intermediate swing trade depending on how you want to trade. And then you can also just trade to hold this and wait for a more convincing move to the upside showing you that the down move is over, or a capitulation move to the downside with elevated volume, or an area where value buying comes into the marketplace. You could play it for a longer trade. In this case, we've got an opportunity to add back a second lot as a lower high is made, holding under 32.80. You can see right here, we're holding below a VWAP. We're holding under 32.80. Cover the second lot into 32 because it's a major support in the daily chart. Love the idea of going to look at a longer term daily support and seeing where the stock may stop. You can add back the second lot as another low high is made, holding under previous support of 32.20. Cover the second lot when the breakdown through 32 starts the base. And you can sell that final lot into an exaggerated down move. Look for the volume to increase. Look for the move to be exaggerated. Look for the volume to increase. And so you can turn this into, go back to my previous slide, you can scalp this, you can intermediate swing this, or as we're showing you on this slide, you can swing it more so and look for that low of day if you really feel confident about that, or a reason to exit. All right, always want to have a trade management slide to look to see how we can trade this better. What you learned. You learned an effective and powerful setup to use during earnings season. You learned an effective and powerful setup to use after important news is released in the stock. So this is not just a trade to use during earnings season, but if there's a significant news released in a particular stock and you can see a technical level formed on day one that's significant, you can also apply this second day technique to it. You learn how to structure a trade with an excellent risk reward. You learn how to think through a trade setup like a pro. We showed you how to start building your playbook, which is your trading business. I love this trade for all the learning that can be done by new and developing traders for second day trades, plus inform our trading decisions. So this is what we call the level 2, for those of you who haven't seen it before. This is where the bids are. You can see ARCA 32.94 for 700 shares. This is the offer. Right here you can see INET for 32.95. And these are the time and sales. So you can see 32.945 goes off at 100 shares. So this is the basis of the level 2. When we're talking about reading the tape, this is what we're talking about. The time and sales shows us all of the trades that are going off in the marketplace and for what size and for what price. And the bids and the offers are showing us where people are willing to buy and sell and for what size. I recently received an email from one of our students in SMB DNA who put together this reading the tape examples. They did a really good job. And this inspired me to write a blog post, which I wrote about recently. And I was actually really surprised by how many people were interested in the article that I wrote. Admittedly, I wrote the article and I thought it was just going to be kind of a mediocre article and didn't exactly think it would resonate with a large group of people. And I put it out there on social media and I was completely wrong. And the response was much larger than I had anticipated. And so that inspired me to talk a little bit more about reading the tape and this video. And so this student from SMB DNA put together longs and shorts information that helps us as active traders inform our decisions to make trades. And so example 1 is, hey, bids are stepping up. So that means that our bids here are 32.94, and now we start to see our bids go a little bit higher. Or most transactions are done on the ask. So we're taking a look at our time and sales, and we're noticing that most of the volume is being done on the offer. People are paying the offer. That's a bullish signal. Or it's thin on the ask of the offer. So we look at the offer compared to the bid, and the offers have much less to sell than it looks like people have to buy on the bid. Or there's a buyer holding the bid, refreshing. So we're taking a look at the bid, we're looking at our time and sales, and they're repeating at 94 cents, and this buyer just will not drop. Or there's higher highs and higher lows. It's more of a chart pattern. Big prints on the ask. So you're looking at the offer, and you see a really large sale that gets done, much more so than you'd seen before. That can be a bullish indicator. We see the ask spoofing. I'm just going to let that go. That's a little bit too much insider baseball. You see the SPYs get higher. They're stronger. So we're looking at potentially buying this particular stock, and we notice SPYs getting a lot stronger. That may give us some information to buy the stock. All right, most upticks. So we're watching the stock, and it's mostly ticking higher. Buyers accumulating. So we're watching the bids, and we're seeing an area where people are absorbing the order flow. and that area is not dropping. This area that we're watching is just not dropping, as opposed to, hey, how come these guys who are buying it, how come they're not dropping and going to try and buy this a little bit lower? So the fact they're not dropping can be a bullish signal. All right, and then we think about ask stepping down. So if we're short something, this is going to be information that could be in our favor. So we're looking at the offer, and we notice a seller at 95 cents, and then we start to notice him stepping lower and selling at 90 cents. That can be good if we're short. We notice that most transactions are on the bid. So if we're short and they're hitting the bids, that can be good for our short position. And we're short and we notice that it's thin on the bid. There's more to sell on the offer that's showing itself than there is to buy on the bid. If we're short, we like to see that. Big prints on the bid. So they're whacking the bids and we think they're then going to drop. That can be bullish. So this is a really good primer for bullish signals, whether we're long or whether we're short. And Stu does a really nice job with that and asks me in a question, I wrote about this in a blog post, which one is more important, and gives me 3 scenarios. And that led me to my answer. And my answer was there's not one particular thing that's more important on the tape that I'm looking for. And my answer was we're using the tape as an indicator, certainly the most effective indicator that we have as short-term traders, the most, and historically the most. And I've been trading for, it's 20 years now. And I use reading the tape as an indicator 20 years ago, and it was the most effective indicator that we had. And today I use it, and it is the most effective indicator that we have to make trade decisions. It's not the only indicator that we use. And that's where some people get lost. It's one of other indicators that we use, but it certainly is the most effective. And the traders that I work with, the large traders that I work with, the 7-figure traders that I work with, inside the firm and outside the firm, to a man, to a trader, are working on one commonality. See it. And what they mean by that is they have a thesis for a trade, but that thesis is being confirmed by the tape, by reading the tape. The order flow is confirming that their thesis is correct. And so my answer, based on my experience working with these large traders and what they're working on, these are 7-figure guys that we're coaching to help them make more money, is they develop a thesis, then they look for a setup from their playbook. So you're to look up for a setup in your playbook. Then they look for confirmation from the tape. So they look for this most effective trading indicator. Then they fight for price, and that equals one good trade. So it's not just using the tape. It's not just reading the tape to make a trade decision. It's putting that inside a list of other variables to help us make really good trade decisions. But it's a very important indicator. And so I haven't talked a lot before, but we like to say fight for price. And I wrote this tweet recently, and I was inspired to write it after actually doing a daily report card with a very large trader who trades overseas. And I gave him this advice, and then I went on Twitter and shared this with the trading community. For active traders, fighting for price is important as it sets your risk reward. This is particularly true as you trade bigger. This seems counterintuitive for large trading perhaps, but it's not. You would think that as traders are trading really large size that they wouldn't care that much about price, but the reality is that they do. Where you start a position determines your exit, and if you're not fighting for price and getting for really good prices, you're going to have to set an exit that's not as good as if you got a better price. Fight for price. So I want to show you 3 examples recently from our prop desk on how we're using reading the tape to help us make better trade decisions. So let's say you want to make a momentum trade. Roku reported solid earnings and was a stock in play recently. Let's say you wish to play this for a momentum trade on the open. A momentum trade is in your playbook. Roku opens and 54 holds the offer with a buyer paying the offer with velocity. This paying of the offer with velocity is a bullish signal. Roku pulls in 50 cents after that offer doesn't lift, but then retests that 54 area. And this is a chart from that day. You can see it getting held up here at 54. And so now we want to make a momentum trade. So momentum trade is, I've got a news catalyst. I've got a level that if it clears, I want to get long. I've got an important level that I'm watching. The tape is confirming to me that I'm more likely to be right. So in this case, we want to see that 54 offer lift. And if it does, we want to pay the offer and trade it on the long side. And we can trade that as a scalp for the most active traders, or we can use it as a signal to start a intraday swing trade. What I mean by that is playing for intraday momentum to the upside, trying to hold it until that intraday momentum to the upside wanes, fails, or trend lines break. So we get this signal from reading the tape at 54. It cannot get above 54. We like the news catalyst. We want an area where we can get long. One of the trades we can make is a momentum trade in our playbook. We need to see 54 lift. We're getting a signal even prior to that this could be strong because of the velocity of how they're paying the offer at 54. So when it pulls in 50 cents and goes back up to 54, we're very suspicious that it's going to lift. And when it does, we want to go for it. Okay, so we're putting together variables to make trades. We're using reading the tape as a signal, an effective signal that is ready to buy. It's not the only way, by the way, we could have bought that stock, but that is a way to make a trade in that particular opportunity. Let's say we want to make a bounce trade. So we just showed how we can use the tape to make a momentum trade. We can also use it to make a bounce trade. In this case, huge offer gets taken as we're looking to make a bounce trade, and then after that, the stock moves higher. We're taking a look at a daily chart, trading a recent stock that was really in play. You can see it gaps down 40%, 50% on the open. Stock gaps down on lower guidance. See that big gap down? We're thinking about our thesis is, hey, it's going to bounce. There's value buying where the stock gaps down. It starts to hold lows and starts curling up. So our thesis is it's going to bounce, and we start to see it can't trade below 10, and then we start to see it hold a little bit higher at 10.10. Can't break through 10, and bid starts stepping up higher. All right, and then we want to see it get above VWAP in this particular trade for our bounce trade. There was resistance forming around 1040 because every time it touched 1040, it pulled away. Once it got tighter and closer to 1040, a huge offer appeared at 1039 for over 50,000 shares. As soon as the offer was taken on the stock, as soon as that offer was taken out, the stock popped 10 cents, broke the 1040s. It broke that resistance level at 1040s, got above VWAP, and then pulled in to retest that 1040s, and then went up 70 cents higher to 1110. So we're putting together a bounce trade. We want it to hold above VWAP. We want it to stop going down. We want it to hold higher. We want a signal from the tape. Couldn't trade above a particular price. Price is really holding the stock up. Gets through there. Bam, it gets through there. They clear out that offer. Finally gets to a price that hasn't gotten to. Finally gets above the area of resistance that we wanted to. We can either buy the pull-in or we can buy it when it clears right away. This is how we can use reading the tape for a bounce trade. All right, let's talk about another example of how we can use reading the tape to make a particular trade. So around 1045, and this particular stock happened to be CGC. We sold off below an important support level at 30. That's our support level we're watching, and then quickly reclaimed that level and started consolidating. This showed us that 30 is a significant line in the sand with buyers and sellers battling because sellers wanted to push this below 30 and keep it there, but buyers bid it back up to hold 30. So there's a battle going on there. From here, we wanted to watch for 30 to become support and use this level as potential long setup back up towards VWAP, which was about 3150 at the time. So after breaking up through 30, stock pulls back, tried testing under 30 again, but this time held higher with a low of 29.80. The tape slowed. It slowed below 30 because the bidders were passively absorbing, stopping an acceleration on the tape to the downside. The next retest at 30 holds stronger, with 30 not even dropping on the bid. And this shows us whoever's propping up the stock is serious about accumulating. There was also a lot more green prints on the offer. That means people were paying the offer, and the bid size was about double the ask size. From here, that 30 support tested one more time, and 30 held the bid without dropping. It holds this 30 bid. It held on 30 for the shortest amount of time on this test, showing that buyers were more eager to bid it up from that level. And from here, we're looking for the chart pattern to start holding higher, to make a higher low and curl up, breaking through this resistance. So as the stock started to curl up towards 30.50, the bids were slowly stepping up about every 5 cents. And once the bid retested 30.30, the tape started speeding up towards the top of the range. Due to this speed on the tape and the higher low and more prints on the offer and the SPY reversing to the upside, all of this gave us more conviction to get long and see if we can get back up towards that VWAP area. And this played out well. It trended up towards our VWAP target. Overall, watching how the stock acts in a consolidation range is a good, around the 30 is a good time to gather information to whether buyers or sellers are in control. In this case, the continuous bids holding higher and the slow tape during the sell-offs helped give us a long bias. So we're using our reading the tape skills to help us to get into a pull-in trade. Strong, we want to figure out where we could buy it into a pull-in. The tape is showing us how. So what we learned from this particular video, reading the tape is our most effective indicator. We use reading the tape with other indicators. Thesis plus setup plus confirmation plus fight for price equals one good trade. And we showed you 3 trade examples where we use reading the tape to help us make better trade decisions.